In 2026, tech giants are basically on track to spend 6,500 billion US dollars on AI data centers.
Which is just a staggering number to even try to wrap your head around.
Right. I mean, that is $6.5 trillion.
Mm.
But all of that money, all of those soaring ambitions, and frankly, the entire future of artificial intelligence is currently bottlenecked by an 8% shortage of physical silicon chips.
Yeah, and manufactured primarily by one single company, which is wild.
It really is.
It just puts things into perspective. We spend so much time marveling at the algorithms, but the harsh reality is that the most advanced software in human history is completely chained to some of the most complex physical objects ever manufactured on Earth.
And that physical constraint is exactly what we were looking at today. We have a stack of freshly updated financial notes and a deep dive analysis report from April 2026 sitting right in front of us.
All of it heavily focused on SK Hynix.
Exactly. This South Korean semiconductor giant sitting at the absolute epicenter of the AI boom. Today, our mission is to look right past all the hype of AI software. We want to understand the physical hardware bottleneck that is, frankly, controlling this entire global industry right now.
Because you really can't understand where AI is going unless you understand the physical limits of where it lives.
Precisely. We're going to explore why SK Hynix is experiencing this explosive historic growth, how they plan to keep their edge, and what potential risks lurk just beneath their record-breaking numbers.
Because there are always risks, no matter how good the numbers look.
Always. For you listening, whether you are an investor trying to make sense of some truly wild tech valuations, or you're just someone fascinated by how the AI revolution actually functions on a physical level, this deep dive is going to give you those foundational aha moments.
The real nuts and bolts of it all.
Yeah. Okay, let's unpack this.
Yeah.
Starting with what our sources actually call the blood of the AI supercycle.
Yeah, blood is a pretty visceral way to describe it, but it's honestly entirely accurate. The specific technology we are talking about is high bandwidth memory, or HBM.
HBM, right.
Right. To understand why it's the lifeblood of NVIDIA's advanced AI GPUs, so we're talking about architectures like Blackwell and Rubin, you really have to picture how it's actually built.
Okay, paint a picture for us.
So traditional memory chips are laid out flat on a circuit board next to the processor. But HBM is completely different. They literally stack the memory chips on top of each other.
Wait, literally stacking them?
Literally stacking them, yeah, like a microscopic skyscraper of silicon. And then they punch thousands of microscopic holes through them to connect them all vertically.
Let me make sure I'm getting the practical effect of that. Is it kind of like trying to push a fire hose amount of water through a standard garden hose?
That is a great way to think about it.
Like if you have this incredibly powerful NVIDIA GPU, it might have the raw processing muscle, but if you're using flat traditional memory, you just can't feed it data fast enough. It starves.
That garden hose analogy hits the nail on the head. The GPU can only calculate what it can pull from its immediate memory. Stacking the chips vertically allows you to run vastly more connections directly into the processor.
It turns that garden hose into a water main.
Exactly. And what's fascinating here is how the nature of AI demand is shifting to make this even more critical. The industry is rapidly moving from the initial training phase into what we call the inference phase.
I hear those terms thrown around constantly. What is the actual mechanical difference between the two?
Well, think of training as sending the AI to college. You are feeding it the entire internet, teaching it patterns. It requires an astronomical amount of computing power, but it's fundamentally a periodic event. You train a model, and eventually it graduates.
It gets its degree and it's done.
Right. Inference, on the other hand, is what happens when that model enters the workforce. Every single time a user asks a chatbot a question, or an AI generates an image, or, an autonomous vehicle makes a split-second driving decision, that is inference.
So inference is the day-to-day execution.
Precisely. And we are now fully entering the era of agentic AI.
Which means what, exactly?
These are AI systems that don't just answer questions, they act autonomously on our behalf. They book flights, they write and test code, they manage your schedule. Because inference requires this massive, ongoing, continuous interaction, it demands a constant, staggering amount of memory. It just never stops.
It just scales infinitely with user adoption.
It does. The sources project this structural shift guarantees continuous, long-term growth in memory demand until at least 2030. That is why the hyperscalers, the Amazons, Microsofts, and Googles of the world, are projected to spend that $6.5 trillion on capital expenditures in 2026 alone.
Which is double the amount they spent the previous year, right?
Double. And every single server rack they build needs that HBM blood.
Which brings us to a massive glaring question. If demand is virtually infinite, and the biggest tech companies in the world are throwing trillions of dollars at this, why not just build more memory immediately?
Because it's just not that simple.
I mean, if I'm a chip maker and people are begging to give me billions of dollars, I'm spinning up a new factory tomorrow.
And that is where the physical reality of our world collides with the digital ambitions of Silicon Valley. The industry is currently facing an 8% structural shortage in HBM.
Okay, 8% doesn't sound too crazy.
See, 8% might sound like a small bump in the road, but in global supply chain dynamics, an 8% deficit means sheer panic. It means major companies cannot launch their products.
Right. The sources note that SK Hynix's entire 2026 HBM production capacity is already 100% booked by customers, completely sold out.
Fully tapped out.
But I still don't get why they can't just scale up faster. Here's where it gets really interesting, you know? Tech moves at the speed of software, but manufacturing moves at the speed of pouring concrete. But surely with unlimited money, you can pour concrete faster.
You can pour concrete faster, but you cannot bend the laws of physics and microscopic engineering. Building a semiconductor fab takes 4 to 5 years.
Wow, 4 to 5 years.
Yeah, it's not just a warehouse. You are building clean rooms that have to be thousands of times cleaner than a surgical operating theater.
Oh, because of the dust.
Exactly. A single microscopic speck of dust can ruin an entire batch of chips. You have to install and calibrate lithography machines that use extreme ultraviolet light to etch patterns onto silicon at the atomic level.
That's insane.
It requires a level of precision that simply cannot be rushed, no matter how many billions of dollars you throw at it. It is a rigid, unyielding constraint.
So if building a new factory takes 5 years, that means whoever already has a working factory today basically holds the keys to the entire AI kingdom. Where does that leave SK Hynix compared to its rivals?
It leaves them in an incredibly dominant position. The notes point out they hold a 50 to 62% global market share in HBM.
More than half the entire market.
Yeah, and more importantly, they are NVIDIA's primary supplier. Right now, being tethered to NVIDIA is basically the most lucrative position in global business.
Wait, hold on. I have to push back here. How secure is this lead, really?
It's a fair question.
We're talking about an industry where hundreds of billions of dollars are up for grabs. You've got massive competitors like Samsung, literally one of the biggest conglomerates on the planet, actively trying to catch up. Micron is in the mix too. Won't a giant like Samsung eventually just spend their way into closing the gap?
That is the multi-billion-dollar question. And the answer really comes down to a manufacturing concept called yield. In the semiconductor world, yield is everything.
Okay, break that down for me. What do we mean by yield?
It is the percentage of functional, usable chips you get off a single silicon wafer.
Oh, so how many actually work after you make them?
Right. Why is yield so hard to get right? Remember earlier when we talked about how HBM involves stacking chips like a microscopic skyscraper?
Yeah, the tiny silicon skyscraper.
Imagine stacking 8 incredibly fragile layers of silicon and then punching thousands of microscopic wires through them to connect them. If even one of those layers has a microscopic defect, or if one of those thousands of connections is slightly misaligned, the entire 8-layer stack is garbage. You throw it away?
Wow. Because the complexity is basically multiplied by every layer you add.
Exactly. So if your yield is low, you are literally throwing away massive amounts of expensive silicon, time, and energy straight into the trash.
And SK Hynix has this figured out.
SK Hynix has a clear, demonstrable yield advantage right now. Now, Samsung is a powerhouse, and their competitive efforts are a real looming risk. But you cannot just buy yield.
It's not something you can just order from a catalog.
No, it requires profound institutional knowledge, years of trial and error, and thousands of microscopic chemical and physical process tweaks. Samsung is currently struggling to get that perfect stack repeatedly at scale.
Well, SK Hynix is just cranking them out.
SK Hynix's high yield is a massive compounding advantage that keeps them highly profitable while competitors literally burn money trying to figure out the recipe.
But even with that yield advantage, they can't just coast, right? If Samsung is breathing down their neck, what is their roadmap for staying ahead?
They are running as fast as they can toward the next generation, which is HBM4. The timeline in the sources shows samples are coming in the second half of 2026, with mass production slated for 2027.
And I'm guessing HBM4 is even harder to make.
Oh, it's even more complex. They're looking at stacking 12 or even 16 layers now, and they're integrating the memory directly onto the logic processor itself to reduce latency even further.
So they're going all in.
SK Hynix is aiming for up to a 70% market share in NVIDIA's next-generation platform.
So they are trying to dominate the future just as thoroughly as the present. But there's another piece of this puzzle in the sources that I found absolutely wild. It's not just about the high-end AI memory. There's this massive spillover effect happening to traditional memory.
Yes. If we connect this to the bigger picture, the dynamic is fascinating because HBM is so difficult to make, so incredibly profitable, and in such high demand. SK Hynix is dedicating an enormous amount of their factory capacity to it.
So it's kind of like ripping up all the local city roads just to add more lanes to the AI highway.
That is a brilliant way to picture it.
The local traffic, which in this case is the regular memory going into everyday smartphones, laptops, and standard servers, has nowhere to go.
Exactly. They are literally converting traditional DRAM production lines into HBM lines. And because overall factory space is rigidly constrained for the next 4 years, there is suddenly a severe squeeze on regular legacy memory.
This isn't just an abstract data center problem then. This means the next smartphone or laptop you buy is going to be significantly more expensive.
Oh, without a doubt.
You, the consumer, are going to feel this directly in your wallet.
You absolutely will. It creates an almost monopoly-like pricing environment for older technologies. The numbers in the report are stark. In 2026, the average selling price for standard DRAM is expected to rise between 62% and 182%.
That is a huge jump.
And standard NAND memory is expected to go up 75% to 91%.
It's just a pure seller's market at this point.
It is, and they are pushing aggressively into other high-margin premium products as well. The sources mentioned they're ramping up LPDDR6.
Okay, let's translate that. What does LPDDR6 actually do?
It stands for Low Power Double Data Rate 6. It's the next generation of highly efficient memory specifically designed for mobile devices.
Like phones and tablets.
Exactly. As AI moves directly onto your smartphone, processing things locally instead of in the cloud, your phone needs much faster memory that won't instantly drain your battery. LPDDR6 is the answer to that.
Okay, that makes sense.
They are also ramping up 321-layer NAND enterprise SSDs.
321 layers. That sounds massive.
It is. These are ultra-dense storage drives meant for massive enterprise data centers. Instead of spreading data out horizontally, they stack the storage cells 321 layers high.
Which saves a ton of space.
It allows data centers to store astronomically more information in the exact same physical footprint. And products like that, along with new modular server memory architectures like SK M2, carry enormous profit margins.
Okay, if I'm paying 80% more for my next laptop's memory, and enterprise data centers are paying huge premiums for 321 layers storage drives, that money has to be going somewhere. Let's look at the actual financials. How is SK Hynix utilizing this massive influx of cash to secure their future?
Well, the Q1 2026 financials are historic. We are looking at a record revenue of 52.58 trillion won. To give you context, that is up 198% year over year.
They essentially tripled their revenue.
They did. But the profit is where it gets crazy. The operating profit is 37.61 trillion won, which is up 405% year over year.
I have to pause on that. They achieved a 72% operating margin in a hardware business.
It's almost unheard of.
That sounds like a software margin. You usually only see 70+% margins for a tech company selling, digital app where the cost to distribute it to a new user is virtually zero.
Right.
But SK Hynix is physically manufacturing the most intricate objects on Earth. The materials cost money, the factories cost billions. The report literally refers to them as a cash printer.
And their return on equity, or ROE, is a staggering 61%. So what are they doing with this mountain of cash? They are executing a highly strategic capital expenditure, or CapEx, plan.
So they're reinvesting it.
Heavily. They are leveraging these record-high profit margins to self-fund massive expansions. Specifically, they are pouring money into completing the new M15X factory and building out the massive Yongin semiconductor cluster in South Korea.
And the goal there is to increase their HBM wafer capacity by 50%. Reaching 200,000 wafers per month by the end of 2026?
Precisely. And here is the strategic brilliance of this move. By self-funding this massive capex, they avoid taking on crippling high-interest debt.
Which is huge in this economy.
But simultaneously, they are raising the barrier to entry so incredibly high that competitors simply cannot outspend them. If Samsung or Micron wants to match that capacity, they have to risk destroying their own balance sheets to do it. SK Hynix is essentially using today's AI windfall to build an impenetrable fortress for tomorrow.
All right, this is where my brain starts to short circuit a little bit.
Okay, lay it on me.
If this company is literally printing cash, if they have an undisputed yield advantage in a market that is structurally locked in for growth until 2030, and they're self-funding a fortress, why on earth is Wall Street treating their stock like a clearance sale?
It does seem counterintuitive.
The sources suggest it's incredibly undervalued. That makes no sense. What are investors so afraid of?
It is the ultimate valuation paradox. On one hand, the stock has had a phenomenal run. It's up 1,388% over the last 3 years, currently trading around 1.3 million won.
1,388% is massive.
It is. But when you look at the forward price to earnings ratio, the forward PE, which measures the stock price against the massive earnings we just discussed, it is insanely low. It sits at just 4.57x.
Which is crazy low for a tech stock.
To put that in perspective, the sources ran multiple discounted cash flow models.
Okay, let's break down the logic of a DCF model for someone who isn't a Wall Street analyst.
Sure. A DCF model essentially looks at the actual cold, hard cash a company is projected to generate over the next few years. It then calculates what all that future cash is worth in today's dollars.
Got it.
When you do that math for SK Hynix, looking at their locked-in 2026 orders and those 72% margins, the model suggests the stock should be priced 70% higher than it currently is.
So what does this all mean? How should someone interpret a 4.57x forward PE on a booming AI stock? Why are analysts pricing in so much fear?
This raises an important question about how markets process new paradigms. Investors are weighing this unprecedented AI growth against the historical volatility of the memory market.
Oh, because memory usually goes up and down.
Historically, memory is a brutal, cyclical, boom and bust commodity business. When supply eventually catches up to demand, prices crash catastrophically.
So analysts are terrified this is just a regular memory cycle that's about to crash.
Exactly. They are building massive risk discounts into their models. They are asking, what if hyperscaler AI spending slows down? What if there's a global macroeconomic shock or geopolitical tension in Asia?
Right.
What about the short-term drag on free cash flow from all that massive capex we just talked about?
Or the looming threat that Samsung finally fixes their yield issues and suddenly floods the market with competing HBM chips.
Exactly. Investors who have been burned by memory cycles before are looking for the exit door before the fire even starts.
That's the tension. Investors have to choose how they view this company right now. Is this a traditional cycle volatility story, where memory prices will inevitably crash in 2027, or is this time it's different scenario?
Are the markets fundamentally mispricing SK Hynix because analysts are stubbornly stuck in the old paradigm of boom and bust memory cycles?
Are they failing to realize that AI inference creates a completely new structural beast?
Right, and failing to realize that the brutal physical constraints of fab construction mean this cycle might be stretched out over an entire decade rather than just a few quarters.
It's the ultimate tug of war between looking at the ghosts of the past and the realities of the future. To quickly recap the journey we've been on today, we've explored how SK Hynix's high-bandwidth memory, with its microscopic stacked silicon architecture, is the literal physical lifeblood of the AI revolution.
The water main, not the garden hose.
Exactly. We've seen how the unforgiving 4 to 5 year timeline of building concrete manufacturing fabs guarantees them a massive moat, reinforced by a yield advantage their competitors are struggling to copy.
And we broke down how those staggering 72% profit margins are causing a spillover effect.
Which will drive up consumer tech prices, right? While allowing SK Hynix to self-fund their leap into HBM4. All while the broader financial market struggles to figure out if this is just another volatile memory cycle or an unprecedented decade-long AI supercycle.
It really forces you to reconsider what the ultimate limit to human technology actually is right now. Which leaves me with a final thought for you to ponder.
Let's hear it.
We spend so much time worrying about the software side of AI. You know, the algorithms, the data models, the sheer human ingenuity required to eventually reach artificial general intelligence or AGI.
It's the sci-fi stuff.
Right. But if the ultimate bottleneck for AI's evolution isn't human code, but rather the multi-year physical timeline of building semiconductor clean rooms, does that mean the timeline to AGI is fundamentally dictated by pouring concrete, forging steel, and stacking silicon wafers?
That is a profound way to look at it.
Mhm.
The superintelligence of tomorrow is literally waiting on the construction crews of today.
It really is.
Thank you so much for joining us on this deep dive. Next time you see a headline about a magical new AI software agent, just remember the physical metal, the perfectly aligned silicon, and the massive factories working around the clock to make it possible. Until next time.